Now, banking is notoriously difficult in many parts of Africa, particularly in rural areas. But the explosion of mobile phone technology has transformed consumer access to financial products. CCTV's Paul Barber spoke with Dave Van Niekerk, founder and CEO of MyBucks. That's a fintech company or a financial technology company. It offers mobile money services in 12 African countries. He started by explaining how new technology has transformed banking.
The old days, if a bank wanted to establish itself and needed to go into the country, get a license, pay the capitalization, and then they would start to have to put down branches and people. And it's that huge infrastructure cost which typically kills startups and which typically makes banks very expensive. So we're able to do that with technology rather than lots of bricks and mortar. So the old expression of moving from bricks to clicks is where we're able to jump ahead or leapfrog the current system and go into new markets.
And why is Africa such a growth area for these types of products?
Well, I think you need to think about it from a developed world perspective. In developed worlds and markets that are established, fintech is actually a disruptor. So fintech goes out and changes the way financial services are done. They will disrupt how lending is taking place from a mortgage or from car loans or credit cards. But in Africa, fintech is an enabler. People are leapfrogging the traditional banking system because in many cases they didn't have access to banking products and services. Now for the first time through technology, you can bank somebody that wants to bank $10. In fact, you can bank somebody that wants to bank $1 because you're not confined and constrained by the costs of bricks and mortar and expensive systems. So Africa's, in the same way cell phones in Africa changed the landscape and everybody in Africa has now got a cell phone. There was not landlines. People weren't connected. So when the cell phone came along, or the mobile phone, it was a case of they went from no phones to everybody having mobile phones. And it's the same in terms of banking and financial services. Many people don't have access to products and services. And there are banks, but many of them are looking at the corporate market and are looking at customers that are more affluent. Now, with our technology, you can take the bottom of the pyramid, people that are living on $1 a day, and bring them into the formal financial services sector. So Africa is really different. It's a game changer compared to developed markets. And I think if you do that right in Africa, you can do that right in many of the other emerging markets where banking and technology are now coming together for the first time. Because somebody should be able to transact on their phone within seconds at virtually no cost. And that is what changes people's lives.
And I wonder what kind of challenges your company runs into when working in African countries. Are there any specific issues related to those countries?
So a big thing in Africa, which is a majority of our market, is we have to go through the regulatory hurdles. We have to go through central banks, apply for licenses. So the good old-fashioned standard red tape is often one of the biggest obstacles. And so in terms of ease of doing business and getting into a country, it often has a lead time of up to 2 years to get into a new market. So that's one of the confining or restricting factors in Africa, most certainly, dealing with that red tape. And then we sit with some issues where it comes to connectivity. In the old days, if you were talking about infrastructure for a country, you would be talking about roads, ports, railway lines. Nowadays, if you want to do infrastructure for a country, the best thing a government can do is give them internet connectivity, and then they will take care of themselves. So to a large extent, we still struggle with internet connectivity in some of the markets where there's still the cost of internet connectivity or access to data is extremely high, and that is of course a barrier to entry. And secondly, the experience on an old generation phone, you'll still find more Nokias on the African continent than anywhere else in the world. The experience on an old generation phone just isn't the same. So one of our confining factors is getting smartphones more onto the continent. We need to get more smartphones out there. And I mean, the estimate is over the next 3 to 5 years, there'll be another 300 million smartphones going into Africa. And that convergence of more smartphones and better access to internet and better access to data at lower costs, that will be enablers for us going forward. But right now, there are obstacles.
In your experience, how much are Chinese entrepreneurs and investors developing fintech products? And is Africa an important market for them?
So China is absolutely, it's got some of the most fintech innovations in the world. One of the biggest virtual banks exists in China. So I think the Chinese market from a fintech perspective is actually well ahead of the game. But in terms of an African investment, the Chinese investment community up until now has looked more at construction, at infrastructure, at manufacturing in the African context. You certainly have some investments in banks in the more developed markets like South Africa, but there's still a big gap and space for Chinese investors to come into the financial services or fintech space in Africa. I mean, we've even considered doing business in China, and most certainly we're looking at one or two of those opportunities at the moment, although I think that's a long-term plan. And for now, just getting Africa and the emerging markets we're in to work seamlessly is keeping us pretty busy.